What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be doing something a little different. In this video, I'm going to show you guys a formula that I have developed to find the absolute most undervalued SPAC stocks in the entire market in a way to limit your risk of really getting, hit hard in these, SPAC stocks that have been selling off like crazy. I suggest for you to take out a piece of paper and jot down some notes because this is definitely going to save your butt in this type of market that we're in right now, with the market being at all-time highs. And only if you feel this video gives you a better insight on the overall market or SPAC stocks in general. Be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's gonna be a lot of great information coming out. You don't want to miss it. Let's get into the video. So guys, right now inside of the stock market, we know it's been a crazy 2021. Ever since February, we had those crazy inflation headlines. This caused a massive sell-off across the market, especially in those high growth, high tech names, and especially SPAC stocks. The Dow Jones is literally at the peak high. The Nasdaq is literally at the tipping point of the high, and the S&P 500 is also at the highest point. So all three of these indexes are at all-time highs. So if you've been following this channel, most likely you may be down on several stocks. That is because, I preach a lot of high growth potential stocks in this market, and growth has still not fully recovered, especially the early names and, those SPAC stocks. While on the other hand, some of these cyclical trades, cyclical stocks that haven't moved in 5 years, retail stocks have surged to all-time highs because the big money, which consists of 80% of the stock market, has been playing a defensive, route to the inflation headlines. So they're trying to be safe and buying those low multiple, low PE stocks in case, the market does have severe inflation. But we know that inflation, just hit a, peak. It could be coming back down, the next month, which is a good sign that inflation has maxed out and could be coming back down. That's really good for growth stocks in the future. But I just want to show you guys some of these stocks in the S&P, the Dow, and the Nasdaq that have surged to all-time highs. And now is not a good time to be buying into those mega cap, large cap names that, the big money has milked all the way to the moon. These stocks are at the highest prices in 5 years. We can take a look at Apple right now. It was really stagnant, but until, that inflation really started ramping up, Apple, even though Apple is a tech stock, it's one of the safest companies to buy into because of its, proven growth, proven resilience. It only has 8% upside right now on the stock. eBay has surged to all-time highs. Look, guys, a 7% rip last Friday. There is absolutely no upside according to analysts right now. Home Depot has surged to all-time highs with only 5% of upside right now. Disney is decent. It just had a massive earnings report, so it did get a little upgrade. So this is actually not a bad play because 17% upside is very solid. AMD has surged to all-time highs in 5 years. 1% upside on the stock right now. They have really milked this one to, significant gains in such a short period of time. Caterpillar, this one has ran the entire year. It only has 11% upside right now on the stock. So most likely there may be a lot of people on this channel that is in the same boat as me right now. Man, my stocks are really getting hit. The S&P and the Dow and these older time stocks, these old time players that have been around for decades are surging to all-time highs. That's because the big money is really playing it safe, trying to avoid those, high PE, high multiple stocks and going into more of the resilient, proven stocks that have been around for such a long period of time. I don't think you should be doing that. I mean, that would have been a great move to make in February. You could have had, gains of upward of 50% in your portfolio rather than being down. There's plenty of people down on high quality names, especially SPAC stocks, 10, 20, 30, even 40%, even though when you think you're buying at the low of around, 10, $12 and these SPACs, come down to 7 in a blink of an eye. It's because, institutional investors that funded those deals are actually selling out because they are worried about, inflation. But the good news is inflation is slowing down. So I believe, in my personal opinion, and I'm starting to hear it from a lot of other bigger YouTubers, the best move to make right now after looking at all three of those indexes at the highest point in existence of time in the stock market, the highest points, all of those mega cap names you just seen, large cap stocks, guys, those companies I just showed you are massive, 50, 100, a trillion market cap. The best move to make right now is to buy small cap names. When I say small cap, I don't mean penny stocks in the 100 million market cap range. Nothing like that. I believe the best range of market cap valuation to buy into right now would be anywhere from 2 billion to maybe 15 billion. I understand, a 15 billion company is not necessarily a, small cap name, but it still is, much smaller than a, massive large cap or a mega cap. So you want to be in that 2 to 15 billion range right now, because those are the stocks that have sold off 50, 60, 70%, guys. Crazy, crazy sell-off. So do you want to be buying at the peak of these big cap names that, big money has already ran up? They could be cashing out, if, the growth stocks start picking up, or do you want to be in at the bottom of the barrel in stocks that have got hit? I understand. I'm in the same boat as millions of people around the world. My portfolio has been getting whacked all of 2021, but I continue to buy the dip when there's large, massive sell-offs that don't correlate to the company's performance and fundamentals that the company is showing, along with acquisitions, targeting newer markets and stuff like that. You have to do your research. And what I've been able to do is continue to average down to get my cost basis so low to where I'm at the bottom, along with barely being down on a stock, maybe 5, 10, 15%. That is nothing. These growth stocks can literally double in a matter of months. We've seen this time and time again. When there's a company that really gets a good movement, it starts running hard. So now we're going to get to what I was talking about in the beginning of the video, where I said I believe the SPAC stocks have crazy, crazy opportunity if you can find the right ones. And that is not easy in this market. I've seen dozens of YouTubers pick absolutely horrible SPAC names that don't have any upside potential and have massive downside risk. So what I can tell you right now is, from 2020 and 2021, there was 657 SPACs filed. That means, they were looking for a SPAC deal. They made a SPAC announcement, just filed for a SPAC, okay? As of right now, there are still 438 of the 657, seeking deals. And then there is 219 SPACs that have completed or made a definitive agreement on a target. So right now you have to choose from these 219 SPAC targets. And what I'm going to be showing you guys is a formula I have created to identify the highest of quality value of SPAC stocks. I'm talking about the cream of the crop. I'm talking about could have went the IPO route. I'm talking better than some of the stocks that went the IPO route this year. So as you can see, I have some of the bigger YouTubers, Meet Kevin and Jeremy, with financial education. They are purchasing SPAC stocks. There's more SPAC stocks that I believe Meet Kevin has been into, but I'm just going to show you guys a couple of names. So we have, Canoe, which is the EV company. Meet Kevin purchased this a long time ago. Shift Technologies, another SPAC he purchased a while ago. Jeremy, Tattooed Chef, that's the vegan food. And then here are a couple of SPACs that I've personally purchased: Open Door, SOFI, PaySafe, 8 And we're going to be looking in, to my, formula that I've created, which I believe is a really strong formula to give you great opportunities to find some of the best deals in these SPAC stocks. We want to identify, the top 10 or the top 20 out of these 219 SPACs. The reason I love SPAC stocks is because some of them, very few, give you an amazing valuation compared to an IPO that comes out the gate at the highest valuation possible for early time investors and the early funding rounds to cash out, after holding these companies for 5, 10 years. They actually deserve a reward because they're the ones that brought these deals to the market, but they're not good deals for people buying at the beginning. And we've seen this time and time again. Coinbase, Airbnb, Snowflake, these all sold off massively after the first month. They went to the market at the highest market, valuations ever, and they sold off 50% at the beginning, and now, they're slowly making the way back up. But that's what I'm telling you, the difference. The reason why I love SPAC stocks is because some of them give you a great valuation on a great growth story. And that's it. That's why I like SPAC stocks, and now you know. So this is an amazing website that I found. It's called SPAC Track, and this gives you the completed SPACs from 2020 and 2021. And guys, I want you to know, I told you growth stocks have sold off massively. It has been a nightmare in SPACs. I'm talking some of these SPACs have gone to literally $1, $2, $3, $4. 95% of them started at the $10 mark. So remember that. So as you can see, I click close in 2020 and there's 64 deals. And if we scroll down, I want to show you guys, how cheap some of these got. And if we look, there is SPAC stocks right now at 58 cents, okay? $1.87, $1.87, $1, 2, 3, 4, 4. These are the SPACs that went public back in 2020. And guys, look at this. 5, 5, 5, 6, 6, 6, 7, 7, 7, 7. I mean, guys, the amount of companies that sold off under 10 was like 80%. That just tells you they're not strong. And once we look into my, magical formula, I'm going to tell you how to identify the strongest of the strongest SPACs that could potentially grow for the next 5 to 10 years. Continuously 8, 8, 8. And if we keep scrolling up, I mean, we're not even into the tens yet. A lot of these companies you've heard of, Nicola, BurgerFi, dozens of companies, Skills, tons and tons of companies. And if we scroll up, we have maybe 5 to 10, over 20. The best performing SPAC stock of 2020 was DraftKings, okay? And then MP Materials, in the 30. So literally only 3 to 4 made it over $20, okay? That is a good sign for finding an opportunity, but I'm telling you, SPAC stocks have really not had the chance to run yet. So my number one rule on my formula for buying in these SPAC stocks is we're not buying any pre-revenue companies that have no revenue for 1 to 2 years. That's going to have you holding the bag for a while before big money really buys in, because big money wants to see performance, okay? So you might just be holding a stock for flat for 1, 2, 3 years. So absolutely no pre-revenue. If it has $0 in revenue for 2022, 2023, we're not buying it. Number two, no companies under $100 million projected revenue, okay? If it doesn't have over $100 million in projected revenue for the year, I don't want you buying it. Why? It's just not a strong, solid company yet, okay? There's dozens and dozens of SPAC stocks with 10, 20, 30 million in revenue. These are small companies that should have just stayed private, They might have went public to get money funded from, retail investors to keep them afloat. So that's something you need to be very cautious about. Number three, market caps over 2 billion. We want to be buying companies over 2 billion in market cap. What this is going to give you is this going to give you, solid base, strong support, big institutional investors had to be in this stock to fund these types of deals. So that is a big point. And I want to go back over to those SPAC transactions. And as you can see at the bottom, look at the ones that have sold off to literally penny stock range, guys. The market cap, 60 million, 80 million, 50 million, 100 million. 100 million, 200 million, 30 million. This one's decent, 400. But look, guys, every single one of these, do you see what I'm talking about? The market cap is very important on a SPAC stock. 100 million, 400 million. All of these are tiny, tiny, tiny deals. You want to avoid the market caps under $2 billion. Going back to some of the companies I'm talking about, Open Door, SOFI, PaySafe, AvePoint. These are massive, massive companies, guys. I'm telling you, these all could have gone, the IPO route very, very easily. But these types of sponsors has brought an opportunity to you as a retail investor to get in at a great valuation. If you can hold through the volatility and stomach these ups and downs in the short term, you will make it out with the big money on the companies that are performing solid and meet these criterias. All these companies that I bought meet the criteria of no pre-revenue. They have massive revenue. No company's under 100 million in projected revenue. They all have over 100 million in revenue. Market caps over 2 billion. They all have market caps over 2 billion. If we go to the top of the list and look at some of these SPAC stocks that have performed well at the top, you can see that DraftKings has a market cap of $22 billion. Meets that criteria. MP Materials, over 6 billion. Open Lending, over 4 billion. And if we go back to Jeremy's SPAC stock, which was Tattooed Chef, we can see that it is right on that line of 2 billion. So it is a solid company. It's pretty strong, and now 1.6 billion market cap. So right now, it's over the billion mark, on the road to 2 billion. So it does have strong support, but he's very bullish. They do have big revenue and growing. Now, if we move to 2021 closed deals, we can see that the deals went up from 104. And if we also go down to, bad performance, you can see that the performance has gotten a little bit better from 2020. So maybe we got some higher quality in 2021. But as you can see, the ones at the bottom, the $3, $4, $5 range, these all are not, large companies. They are very, very small. Look, not even one of these have met over $1 billion in market cap. And these are still in the $5 range. So if we keep scrolling a little bit, make some bigger moves. But if we keep scrolling, guys, and we keep scrolling, we're about to break the $10 range. Let's keep scrolling, okay? Now we're getting into the stocks, about to be over $10. Let's keep it moving. Let's keep it moving. All right, we're getting to the stronger companies that are, holding up over that $10 range. There has to be a reason why. And if we scroll to some of my buying opportunities that I'm recommending, SOFI Technologies, guys, this is holding up over 10. This is a massive company, 13 billion market cap right now. This company has strong, management team. This company has strong growth, strong support. Retail investors love it, and we're seeing institutional investors, growing right now on these sell-offs on this company. So the bigger the company on the SPAC deal, it's almost better. And also PaySafe Limited, it is at the $10 range, but the market cap right now, this isn't updated. It is around, an 8 billion market cap. This is a big company. That's why you haven't seen it tank. And on top of that, they have revenue of over $1.5 billion. And, SoFi has over $1 billion in revenue. So I'm telling you, if you follow those key fundamentals of over 2 billion market cap, over 100 million in revenue, those are going to put you right in line with some really good companies. You don't want to be buying those tiny companies that are close to that penny stock range under 2 billion in market cap. You want to go for that big revenue over 100 million, market cap over 2 billion. Those are the two strong things I recommend right now. If we keep scrolling, you want strong SPAC sponsors. I can tell you right now, Open Door and SoFi have Chamath Palihapitiya. He has invested in some of the largest companies in the world. Amazon, Tesla, even Bitcoin. These are some of his biggest returns ever. And he's funded about, 10 to 12 deals right now for SPACs and pipes. And I can tell you right now, Open Door and SoFi are his two biggest deals. So you want a strong SPAC sponsor, along with Bill Foley funding the PaySafe deal. This is a massive company, guys. BlackRock is so deep inside of this stock, guys. They are heavily invested for the last 5 years. They are putting tons and tons of acquisitions together. So that company is making over 1.5 billion in revenue. You could literally combine 30 to 40 SPAC stocks that are sold off at the bottom end range. And strong management, of course. You want to do your details on your management team, okay? Make sure these guys have been doing this for a long time, had strong businesses prior to the companies they're in. And also, you want to check the earnings report. This confirms the investor presentation is correct. I've seen multiple SPAC stocks that did not meet the criteria of their investor presentation. Romeo Power, pulled back their revenue projections massively. XL Fleet, totally missed revenue by millions. Nikola, totally had no pre-revenue, no pre-orders coming. So you have to be very cautious of these SPAC stocks that, are not meeting the criteria of their investor presentations. And I've done the research, and so far, Open Door, SoFi, PaySafe, and ApePoint have absolutely been stellar, on point, with their, revenue projections for the year. And that is because, they had strong SPAC sponsors and strong management team that you can trust. So I'm telling you, the big big things you want to look for. This is more a little bit in-depth analysis on these four, but these three are the keys to helping you find those amazing deals inside of the market. No pre-revenue, no companies under 100 million in projected revenue. Market caps have to be over 2 billion. So if you follow these three key elements, you will find amazing buying opportunities inside of the stock market with the SPAC stock sector. I believe this is the most undervalued sector, especially in the small caps. You don't want to be buying all-time highs with the big money, the Home Depot, the Apple, eBay, Lowe's, Microsoft, AMD. These are all at all-time highs. It's because the big money is piling into them, and a couple of retail traders are FOMOing behind. You want to be buying those small cap names right now, guys. 2 billion to maybe 15 million at the high, and be sure to do your due diligence on the revenue numbers. And then if you want to get more in-depth analysis, you want to check the sponsors, the management, and read up on these earnings report to make sure that they are lining up accordingly. And I can tell you right now that Open Door is over 10, SOFI is over 10, and PaySafe is over 10, and A Point is right around 960. It's still a strong company. It's just a little bit smaller, and I see it as an amazing cloud play as well. And only if you feel this video gave you a better insight on opportunity inside of the stock market, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it, and I hope you have a great day.